Hello and welcome to this midday market mood check on Moneycontrol. I am Nandita Khemka and I have with me my colleague Yatin Mota. Well, Yatin is turning out to be a pretty dreary Thursday for the markets, and blame it on Fed, even though it has hiked rates by just about 50 basis points, which was the expectations in the market. The tone was pretty hawkish. In fact, Powell has said that the Fed is in no mood to stop the rate hikes for now, and there were expectations that maybe in the second part of next year they would look at a pivot of some kind, but looks like that is not happening because he had indicated now that the terminal rate, Fed funds rate, will be somewhere around 5.1% vis-a-vis the earlier indication of 4.6%. So that means higher interest rates will persist for quite some time, and maybe in 2024 they will go ahead and look at cutting rates if at all.
Clearly, and Nandita, as you mentioned about rates, why it is important for equities is that more the rates are, the more allocation happens to the debt market because the return there becomes attractive. Number one, it's not so attractive for emerging market equities. And the other point is that when you have to discount equities, you use a terminal rate. So as you're mentioning that the terminal rate, if it increases, then the equity value goes down. So probably that is one sentiment dampener which is playing up in the markets, and probably that is the reason why we are down in trade. If you look at, it's like a big cut on the Nifty right now, 135 points down, and Sensex is down almost 500 points. Mid-caps are holding up pretty well in the first half, or probably 1 hour back, but they've also given up gains. The small cap index is marginally up in trade, and advanced decline ratio also deteriorated quite a bit. So the morning was strong, but I think the selling is trickling in as we speak.
Right, when we look at the sectors, I think the realty pack as well as some names in the energy pack were doing pretty well. If you look at the Nifty gainers, I think ONGC was among them, and all the other sectors are deep in the red, and in fact IT sector that had staged a comeback after a few sessions of drubbing has once again succumbed to selling pressure. In fact, for the IT pack, let me mention it is poised to clock its worst year in the last 13 years.
Clearly.
So looking at these higher rates, doesn't look like the IT pack will sustain any gains that it picks up.
Yeah, and higher rates probably also mean that US might see a recession much before the street anticipates, and probably that is the reason why IT stocks are beaten down. In fact, 1.5% down for the IT index. In fact, all sectoral indices on the NSE are in the red. Be it autos, FMCG, metals, IT, all of them are seeing some profit taking. In fact, Nandita, if you look at the losers right now, as far as the Nifty 50 is concerned, we have IT stocks only. Tech Mahindra, Infosys, TCS down anywhere between 1.5% to 3%. Also, Titan, Tata Steel are the other stocks which are losing in trade. Hero MotoCorp, Tata Motors, Britannia, a few gainers on the Nifty 50. But look at Nifty 500 or the FNO stocks. IRCTC is one of the worst performers today after the government announced an OFS for 5% equity. So that is one stock which is in focus, down 6%. NCC, Union Bank, Welspun Corp, these are the stocks which are looking at some profit taking in trade today. However, the government or the PSU insurance companies are doing well, be it National Insurance or be it GIC, both of them are up. IOB, PNC Infra and Mahindra CIE are amongst the other gainers as far as the mid-cap indices are
Any
concerned.
52-week lows today, Yatin?
If you look at 52-week lows, only Metropolis is one stock in Nifty 500 which is at 52-week low. However, IDBI, IOB, PNB, Federal Bank, Karur Vysya Bank, all of these banking stocks, the mid-small cap banking space is active. That is hitting a fresh 52-week high.
They have been rallying for quite some time anyway. For the last
and amongst the large cap or the mid-tier companies, M&M Finance, L&T Finance, and Britannia, these are the stocks which have hit multi-year high today.
Well, if you look at Wall Street last night, the cuts weren't as deep as one would have anticipated. So in the morning, at least, we thought that maybe the Fed rate hike has and the tone as well has been discounted somehow. But today, later today, we'll have the Bank of England and ECB also coming up with their rate decision. So we'll have to see how the markets react to that, because Bank of England is once again expected to hike rates by somewhere around 50 basis points also. So it's looking pretty wobbly for the markets at the current juncture. But with that, it's a wrap on this midday market mood check. We'll see how the session goes from here on, and Yatin will of course be back with Bazaar Gupshup post market close. So stay tuned.